Happy Friday. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Well, it's a bloodbath out there. Bitcoin taking a nosedive. The CoinDesk Bitcoin price XVX index is currently at $38,090. Retreating over 11% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin in sell-off mode, descending below that key psychological $40,000 resistance level and spiraling further still. Media outlets are sounding off, linking the fall to everything from the Bank of Russia's report calling for a ban on crypto, to mining difficulty hitting an all-time high, to the more frequent overtures of a global market and tech stock sell-off. Risk is off the table. And if Bitcoin is taking cues from the cyclical nature of the markets and global economy, those notions are at least tempered by this chart showing Bitcoin and Ethereum in white and red alongside growth stocks indexes, the S&P 500 and NASDAQ in yellow and green there at the bottom. CoinDesk's Omkar Gaboli writing that the key to sustainable Bitcoin price recovery is renewed institutional participation, which remains elusive, adding that Bitcoin's failure to rise back above $40,000 Friday may invite more chart-driven selling. Crypto financial services provider Babel Finance telling CoinDesk that the Chinese Lunar New Year may encourage Chinese investors to cash out and put the market under greater selling pressure. The week-long holiday begins January 31st. All right, so joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel. We've got CoinDesk Managing Editor of Technology, Christie Harkin in Toronto, and Managing Editor of Markets, Brad Keoun in Austin. Hello there, Brad and Christie. Good to have you on the show. Happy Friday.
Happy Friday, Christine.
Happy Friday.
All right, Brad, what's going on with this sell-off? And there are a lot of theories out there. I mentioned the crypto ban report by the Bank of Russia, the tech stock sell-off, global market sell-off, all the above. What's your assessment?
Well, I think you did a great job of summarizing the high points. The macro investing environment has really changed a lot over the past month or two, and just this week, it's really starting to hit markets all across the board. And of course, the big driver here is, rewind to March 2020, we had the coronavirus, the Fed flooded the financial system along with all the other central banks with emergency money. And now as we're, starting to reopen the economy, all of a sudden this money's coming flooding back. We're getting really high inflation. Now the Fed's got to go the other way. Everybody's, really starting to get worried about inflation. Even, President Joe Biden's talking about it. He's getting criticized for inflation. And so the expectation is the Fed's really going to start putting on the brakes here, which means cracking down on tightening monetary policy. And that's just, putting pressure on every asset that's considered risky. And of course, Bitcoin is one of those.
Well, earlier this week, Morgan Stanley came out with reports saying, crypto markets are weakening as central banks look to tighten monetary policy, and mentioned last week that blockchain analytics firm Into the Block said that Bitcoin's correlation with the M1 money supply has risen, suggesting a strong statistical relationship between the two. Where do you see the new support and resistance at, Brad, for Bitcoin?
Well, I don't think anybody's talking about resistance right now. People are just wondering where the bottom's going to be. But our top technical analyst, Dominic Dantes, just put out a piece saying that right now we're around 38,000. 37,000 could be a point where some buyers start to come in. Below that, we could see a rapid sell-off to 30. So it'll be, people will be watching to see if we can hold above 37K. But, right now, nobody's wondering how high we're going to go. It's just how low we might go.
We also had an article out on CoinDesk about the Grayscale discount reaching a record low. Tell me a bit about, does this mean institutional interest is waning, or maybe they're just going to get exposure in other instruments, so like Bitcoin futures ETFs, spot ETFs in Canada?
Sure. I mean, here in the U.S., we continue to have, the roadblock for Bitcoin spot ETF, and that roadblock is SEC Chair Gary Gensler. He does not want to approve spot Bitcoin ETF. He's rejected everyone so far, pushed back deadlines. There was another one that was rejected this week. The Grayscale, it's this, there's no redemptions from this. The only way to get out of it is to sell your shares. And right now that might mean selling at a loss for a lot of people. And they want to convert that into a spot BTF. And if they can do it, we might see that discount trade back to par. But right now, if they can't do it, you're kind of stuck in GBTC, paying their management fees, and it's sort of like market anticipating being stuck paying fees for something where you could just buy Bitcoin also. It's maybe not such a good deal at this point.
Well, despite this price crash, Christie, the Bitcoin hash rate and mining difficulty are in an all-time high, right?
Yes, indeed. And we did see that coming. Last night, a little bit after 10 o'clock p.m. Eastern time, we went up. And boy, did we go up. Almost 10%, something like 9% increase in the Bitcoin difficulty. And that's a reflection of the increased hash rate, which, of course, we knew was also coming. And what's really remarkable about the fact that the hash rate has been steadily climbing is that this is in the face of, and there was a lot of hand-wringing over Kazakhstan going offline a couple of weeks ago. And even with Kazakhstan going offline 2 weeks ago, we went up a tiny percent, and now we've gone up almost another 10% difficulty. And the Bitcoin difficulty will adjust higher when there are more machines online, when the hash rate is higher. And when the hash rate is higher, the network is more secure. And that's been the story, really. Ever since China went offline back in the spring, it went, and at that point, China was holding, 60%, 70% of the network hash rate. The network has, first of all, not a blip. It did not go down, did not have any trouble. It just kept motoring along, and it has been steadily increasing. And that's because the mining distribution has been diversifying around the world, especially into North America and some parts of Asia outside of China. And it just really has been a testament to the resiliency of the Bitcoin network.
Interesting. By contrast, this ESG environmental impact of Bitcoin cryptocurrencies, proof of work, is also continuing to wage on. Congress held a hearing on energy use in crypto mining the other day. The vice chairman of the European Securities and Markets Authority is also calling for a ban of proof of work crypto mining in the European Union. Obviously, proof of work is the consensus algorithm mechanism for Bitcoin and Ethereum, and they're citing environmental concerns. Any thoughts on this, Christie?
Yeah, this has obviously been a drum that people have been critics of Bitcoin and other proof of work blockchain have been banging for a while. And I'm not saying it's not without merit, but the main takeaway that I got, at least from these two things that happened this week with the suggestion of a Bitcoin ban, or at least a mining ban in the EU, and then the questions that came up in the hearing, is that we have a long way to go in terms of education when it comes to policymakers around the world, when it comes to Bitcoin mining. There are some outdated assumptions that have been disproved over time. They're operating often under old information, and that's why we need to be furthering the education goals that have been out there by organizations like, say, the Bitcoin Mining Council. So first, if you look at the EU, that strikes me as a bit of a tempest in a teapot on their part, because there's not a whole heck of a lot of mining happening in the EU to begin with. And of those sites, a good number of them are actually using renewable energy in remote areas that don't otherwise really have a pull on the grid. For example, Northern Data has operations in Sweden and Norway, and they're operating at near 100% renewable energy sources. So that, and they've been operating for a while. So those are things that I think that you're getting some policymakers who are reacting to headlines that are maybe alarmist, or they're not getting the full picture. And I think we have a ways to go. And that also came up in the Oversight and Investigation Subcommittee of the House Energy and Commerce Committee, which had their panel yesterday to discuss the environmental impact of crypto mining. What was remarkable to me there was the speakers that they had, for the most part, were a little bit, again, outdated, I would say. We had Solana Computing CEO John Belizaire and Bitfury CEO Brian Brooks, who really did a lot of the heavy lifting. And thank goodness they were there to really bring the Bitcoin discussion around energy to the current actual reality. On the other hand, I was really impressed by the fact that there were some very thoughtful questions posed by members of the committee. And they, of course, focused on energy consumption, but it sounded like they had at least done some homework beyond the alarmist headlines, and that was good to see.
There was also Cornell tech professor Jules.
Yes.
I wonder your thoughts on him. He was kind of the big critic in the room.
Yeah, and I think that, well, there was definitely some outrage on crypto Twitter that there wasn't a whole lot of disclosure on his interests in proof of work blockchains to begin with. Mm-hmm. But I think that he made some excellent points about the fact that, Bitcoin is not blockchain. There are other blockchains that are not Bitcoin, and therefore
that was his main point.
Blockchain in general. That was interesting.
Right.
But he also seemed to imply, and I don't think he did a very good job of explaining to the committee, that Bitcoin can't just flip a switch and become proof of stake. Bitcoin is proof of work. There's a whole lot of consensus, a whole lot of tech that would have to go into, not that Bitcoiners really want to change over to proof of stake, but it's not like there's some central authority that can be like, well, shucks, I guess we should, switch to proof of stake. Let's do that tomorrow.
We spoke to Valkyrie the other day, who said that Professor Jules should have disclosed his potential conflict with working with Chainlink, which is a proof of stake.
Yes.
Blockchain. All right. Looking ahead to next week, Brad, let's take a look at the markets. Everyone wants to know, are we headed for lower lows? We also have a Fed meeting next week. Don't know if that might move things at all.
Well, yeah, I mean, we've had this big kind of lurch in the markets all of a sudden. And I mean, if you asked me a couple of days ago, the Fed has their meeting next week, and they're already announced kind of a plan for tightening monetary policy. They're winding down their asset purchases. They're going to finish that by March. The expectation is that they would do a rate increase after that, and maybe we'll have 4 rate increases, maybe even 5 this year, which is way more than people were expecting just a few months ago. But what's interesting is people say, I'm just reading in a Coinbase institutional research report, the Fed is, in some ways they say they're independent and they focus on the economics, but they also talk about financial stability. And if the markets are falling out, they're not going to go more aggressive than people are thinking. In fact, they maybe will go softer, But a few days ago, I might have said you might have seen a surprise rate increase next week. But I doubt it now, with markets kind of, not reacting very well to this. It's like the taper tantrum of 2013.
All right, the taper tantrum. We've got to leave it there. Thank you so much, Christie and Brad. Have an excellent weekend. Thanks for joining us. That was our
Thanks.
CoinDesk Week in Review panel with Managing Editor of Technology, Christie Harkin, and Managing Editor of Markets, Fred Keoun. That's it for All About Bitcoin. I'm your host, Christie Lee, and we'll do it all over again on Monday at 3 o'clock Eastern. Also, join me Monday morning for First Mover in New York, 9 a.m., your first look at the day's global crypto news headlines. You're watching CoinDesk TV.